program is brought to you in association with First National Bank of Botswana.
FNB, how can we help you?
A year later, the COVID-19 pandemic continues to spread and evolve, having far-reaching effects on lives, businesses, and economies worldwide. While governments all over the world are improving measures aimed at mitigating the disruptive impacts of the virus, companies are also looking to protect their people and enhance their resilience while also seeking potential responses to ongoing financial losses. Even though efforts by many of these companies have been noble, people have unfortunately still lost their jobs. While it was inevitable that would happen as the virus continues to ravage company finances, it does not negate the fact that these were people who had monthly financial obligations. Some of these are mortgage installments, car loans, personal loans, and various insurance policies. Our interest this evening will be on insurance, which by definition is a contract represented by a policy in which an individual or entity receives financial protection or reimbursement against losses from an insurance company. These losses may be on property or even life. The company pools clients' risk to make payments more affordable for the insured. So in essence, insurance policies guard against unforeseen inconveniences with affordable contributions to the insurer. But sadly, a default on payment means you forfeit any benefits from your chosen policies, regardless of whether or not you'd been religiously paying for 50 years, but unfortunately are unable to keep up with premiums due to reasons that may include job loss. Tonight, we wish to understand what options there are within the insurance industry for those who find themselves in unfavorable positions, whether because of this virus or other matters. Insurance expert at one of the local commercial banks, Mosadungwe Musini, joins us for this discussion. Mosadungwe, thank you so much for coming here on First Issues. Today we're talking insurance, but perhaps before we go any further into our discussion, you could explain to our viewers what insurance is in layman's terms.
Insurance really is a way in which people or organizations transfer risk from themselves for a fee, which is usually called a premium. So you are literally saying, I have this problem. Should anything bad happen, I may not be able to afford to bring it back or to settle it. Therefore, I'm going to pay somebody to assume that risk.
Sadi, what core understanding must we have about insurance?
The important thing to understand, one, is that it is a regulatory thing. You can't just, out of the blue, decide you're going to form something that looks like insurance without having the right registrations. So insurance in Botswana is regulated by NBFIRA. Therefore, there has to be a very lawful arrangement happening there. So you cannot, somebody cannot buy risk or cannot assume your risk unless if they are a registered insurance company. So only insurance company in Botswana are allowed to transact in that manner of business. And then the other thing that people also need to understand in terms of as individuals is, when do we say there's insurance? We say there's insurance or there's an insurance transaction when you've actually defined the thing that you want to insure. Is it a house? Is it a car? If it's a life, whose life is it? And how long are you insuring this thing for? As well as there has to be a premium. So there's a fee attached to it. So usually if you haven't paid a premium, even though you have asked somebody to assume your risk, unless there's a premium paid, there will be no cover. So it's one of the basic things that you need to understand. There has to be a premium exchange of some sort.
Speaking of payments, what is the rule on policyholders defaulting on their monthly installments on their policies?
There are different payment frequencies. So some policies will be monthly policies, some policies will be annual policies, some policies you can even pay quarterly if you want. And all of the policies and insurers will have different rules governing all of these different policies. So I think commonly we know in our industry that, as an example, for a funeral policy or a life policy that you pay monthly, after a certain period, usually it's 3 months. After 3 months, then the policy will lapse, so there'll be no cover. So similarly, even if it's a monthly policy for a car, if you're not going to pay the premium or if you skip, there'll be no cover. So that literally other policies that will say no premium, no cover. Others will give you a certain period to miss premiums and then it will lapse.
Well, in the instance where a policyholder can no longer afford the installments on that cover, but they're still interested in it, what options are there for them?
Let's start with a life policy or a funeral policy as an example, because most of us in the industry will pay those on a monthly basis. So usually when you come and you're under financial stress, it's important to remember why, the value that you are getting from that policy. Therefore, you need to then have a look at the people that you've covered or even the cover levels that you have. So first of all, you say, I need this policy, but I insured for 50,000 and therefore the premium is higher. Perhaps let me reduce my sum assured to make it more affordable. Or you even look at the people that you've covered and you say, who are likely to impact me financially should they pass on. Maybe you've included several, very extended families. You can literally cut it down then to make it more affordable for you so that you don't lapse the policy. But also, there's always, you can literally do that at any point to be able to say, I can't afford this, to make life affordable for myself. This is what I'll do. And then when life gets better, you can then go back and adjust. But it's also important to understand that during all of those changes, whether you are adding people or reducing people or increasing the sum assured, there may be some terms and conditions such as maybe waiting periods if you're going to add people. So it's important to know all of those policy rules.
Sadi, there are policies whose installments increase by a certain percentage on an annual basis. In the case where I want to backtrack on this agreement with my insurer, is it permissible?
It is permissible. So I think we also need to understand why that is. So there are policies that are age rated, the premium will increase as you age. There are some of them in the market. And then there are some where you actually opt into that arrangement to say, after every year, you try and ensure that the limit that you have also moves with inflation. So you don't have a situation where you insure for 10,000 and then you keep that amount and then 10 years down the line it's still 10,000 and you can't quite do what you needed to do.
In Africa, help is what we do. That is why we at FNB are relentlessly driven to provide real help to you, the passionate and courageous, the creators and the optimists. These are the entrepreneurs we support, the communities we uplift. It is because of you that real help is what we do. FNB, how can we help you?